Hello, everyone. Can you hear me?
Hi, hello, yes.
Yes.
Hello, Anton. How are you? Long time no see.
Yeah, not so bad, Victor. How about yourself?
Very well, thank you.
No, no, it's okay. Yeah, it's fine. Okay, John.
Okay, so I see that there are quite a few people in the group here. That's excellent. Very happy to see everyone. So yeah, let's let's get to it. If you have a question, if you have a topic that you want to, discuss, get to just you don't need to raise your hand or anything. You can kind of just go ahead and get in there, and I'll try to, address all the issues kind of one by one. So who wants to get going here? Terry? Terry King, you want to say something? Okay, I see iPhone is yep, I'm listening. iPhone, go ahead. Oh, okay. iPhone's on mute now. All right. So, okay, I see Andy's here. Chad, Hassan. Okay, a lot of people that I do know. Let me just approve your note taking here. And I see that Chad is pretty active too. Okay. All right. So yeah, I mean we can go ahead and start the Zoom session. So the primary reason for the Zoom session is basically, I've gotten a lot of requests to do another Zoom session, group Zoom session, because we do these periodically, usually about once a quarter or so. And since Q3 is coming to an end today, it seemed like an appropriate time to go ahead and
Oh, Victor's got his little thing going on this morning, honey. Victor,
yes,
his
yes,
videos.
yeah, yeah, it's me. Hey, how's it going? All right, very good. Yeah, so let's go ahead and kick things off. Again, this is there's no like formal format or anything like that to these things. We just basically, kind of a Q&A session. We discuss some topics that you guys may have and things of that nature. So, not to go on
Yeah, hey
forever.
Victor.
Yeah, yeah.
I'm happy to kick things off. Hey, how you going? It's Terry here from Sydney
Hey,
in
how are you,
Australia.
Terry? Nice
Yeah,
to
good,
nice to hear
good,
from you.
good, good. So, the market keeps going, keeps pushing, keeps pushing. We're expecting a pullback.
Yes, we are.
Hasn't really materialized yet, and I guess as we get closer to November and December and January, when typically the market is pretty strong, are we going to get something, do you think, between now and then, or
Yeah, I mean, here's my thinking on this. I think that we're getting something now because here's what happened. We had a bit of a rolling kind of correction, pullback, whatever. I mean, it's hard to call it correction, but we had like a rolling pullback that started in the middle of July. So we had a lot of momentum stocks correct by like, 10 to 20%, some 30%. Then that kind of transitioned into a broader, like a bit of a tech sell-off we had, with stocks like AMD and Dell and others, kind of declining by some by 10 or 20%. So we did have a bit of a pullback, not really a broad market correction or anything like that. Now we are seeing now basically a similar occurrence that we witnessed back in the summer, but this time it could go a little bit deeper. We could maybe see a little bit of a broader, maybe broader decline because we've had, quite a bit of a run up recently since April. We're up something like 50% on the Nasdaq or something like that. So that's pretty unprecedented in such a short time frame, and the market hasn't really pulled back by much at all. So, maybe we could see some pullbacks happening soon, actually. Possibly between now and and the October Fed meeting.
What's your outlook on gold and silver, Victor? Do you think they will pull back with stocks in general, or
I think that they have to pull back because again, trees don't grow to the sky, things they can't go up forever. I understand it's a very, it's an excellent kind of like a Goldilocks environment for gold and silver. It's the sweet zone because we have the Fed easing, we have inflation, we have debt issues, things of that nature. So it's a very solid, backdrop, a very good environment going forward for sure because we're going to have a lot more easing next year. We're probably going to have quantitative easing after that because we're going to get a really dovish Fed chair, most likely. It's actually that new guy, Stephen Meyer, I think is his name. So yeah, but still, gold and silver, just from a technical perspective, they need to have a pullback. So I think maybe now we're starting to kind of see that possibly, that kind of latest leg into this shutdown. And maybe around here seems like a good time for a pullback for gold and silver. So I've reduced it a lot. In some side accounts, I'm shorting some gold stocks, in full disclosure, and some silver stocks. These are short-term positions, of course. I don't plan to keep them on for a long time, but I do think that a lot of these gold stocks and silver stocks that ran up by like 100 or 200% in the last year or even less, I think that they can easily have 10 to 20% corrections. So, and that would all be absolutely normal, healthy. So, why not try to capitalize on it?
right? And I suppose the same is true for crypto as well.
Crypto is a little bit different,
Oh,
but you know, I mean, crypto could also have a more significant pullback, of course. Bitcoin kind of, it did have a nice pullback. It doesn't really move as much with gold as it does. I would say that it moves more in sync with risk assets like like stocks like the Nasdaq, for instance, is closely correlated to Bitcoin actually. So yeah, I think if we do get this broad market correction, I think we would probably need a broader market kind of pullback to get Bitcoin back down to maybe 100K or so.
right. I guess there is one question that's on everyone's mind, but I guess you'll want to leave it for last. And what's your outlook for 2026? Do you expect any major corrections?
Well, I'm actually very positive on 2026. I don't think that we're going to see a recession. I think, we may see like a transitory slowdown. I'm more concerned with an AI, slowdown because that could really impact kind of like the higher alpha and the AI related stocks. So any signals in the AI build out, process that slow down in that space could be quite negative for a significant portion of the market. So I think that is like the biggest risk. I don't really think we're gonna have a recession. So and then the other part to that is that we are going to see easier, more accessible monetary policy. So even if we do have some pockets of like an AI slowdown, I think we're going to have a lot more investments in a lot of areas and probably AI as well. I don't want to jump the gun and say that we're going to have an AI slowdown for sure next year, but it is possible. It's something that we need to keep a close eye on because it's something that could impact the markets very profoundly if it occurs. So that's my number one concern actually is the potential AI slowdown. But I think it's very positive that we are going to have an easier monetary policy plus likely robust growth. And I think the Fed is going to be a lot more tolerant of more elevated inflation. So we could, for instance, have, like 3% inflation and then the Fed will be cutting at the same time. So yeah, it's going to be an interesting dynamic that's actually going to be favorable for risk assets in 2026.
Nice. And this monetary policy will most likely eventually lead to more inflation, as you say. Do you have any like an idea of how much time it will take, like 2 or 3 years, or maybe so you're more familiar with these cycles of, money
Yeah,
printing.
I mean, right. Every cycle is different, of course, and for now the Fed is not money printing. For now, the Fed is actually still quantitative tightening, so they're actually still reducing their balance sheet, as paradoxically as that may seem. They are reducing their balance sheet, so they're doing the opposite of QE right now, but they are lowering interest rates. So, but it makes sense for now. Um, Down the line, that quantitative tightening will end, actually, probably will end very soon. And then QE is not going to occur, of course, right away. It will probably come along when there's a reason for it to materialize. So that could be, maybe even in 2027 or a bit later. I'm not sure that we're going to have QE in 2026. We're definitely going to have easier monetary policy. Um, yes, eventually it will lead to more inflation, of course, and there will be consequences, and there will be negative repercussions for sure. But until then, we could have a lot of upside in markets. So my advice here is to kind of focus more on the near and intermediate term, and then, kind of give it a little time to see how the longer term image, how it plays out, how it morphs and it shapes in the next year or two, because it's really difficult to kind of, predict how things are going to be like a year or two from now, because again, we need to follow the data, we need to follow the Fed, and we'll get signs and hints along the way for sure, when things are going to be kind of deteriorating on that side, like we saw in 2021, I think.
Right, right. So we still have at least a couple of years before this has any impact on the market.
I believe so. I mean, every cycle is different, of course, but I believe that it's a little premature to worry about that right now. But it's always good to look ahead, so good job on that. Okay. So, I'm just going to ask everyone to mute their microphones, who is not speaking. So please go ahead and mute your microphone if you're not saying anything. And we can go on to the next question. So that was Anton. So who's next?
There
Yeah,
are some
Victor,
questions in the chat.
Okay, Hassan, go ahead.
yeah, it's Hassan here, Victor.
Hey,
First of
Hassan.
all, thank you very much for everything you do for us. Like, I really appreciate for all the guidance and everything.
Thank you.
Um, and I was just asking, like, can we also like follow the AWP for like the retirement accounts as well? Like, if we have some retirement accounts, like, can
Yeah,
we follow there
yeah.
as well? For there, you think?
Absolutely. The AWP is very much structured towards, not only like an all-weather portfolio that just about anyone can have, but it's also very much, I think it's very well for, it's very well structured for a retirement account as well. And that's for several reasons. First of all, it's it's continuously changing. So, it'll be more, it morphs, there's a lot of rotation going on. So it's continuously, it's never static, basically. So that's what makes it so good. And I mean, you also get that tax benefit in a retirement account, where you don't get taxed on the short-term gains, on the capital gains. So I think it's actually ideal for a retirement style account. And then when you mix the ETFs in there as well, which I'm actually going to incorporate more ETFs from our ETF portfolio into the all-weather portfolio, So that will kind of give you like that perfect, I think, mix, especially in a retirement account.
Awesome. Well,
Yep,
thank you.
you're welcome.
Yep.
So
Also just
Victor,
want
sorry.
go
Yeah,
Yeah,
ahead, buddy.
Victor. So if I can I maybe ask some questions. So
yeah, go ahead.
first of all, thank you so much for, I've been following you for, over a few years and happy about it.
Very
Um,
nice.
so I want to know you any thoughts about the coal like AMR type of investment, and because I see it dipped at 100 and came back nicely, but so I wonder if you have any thoughts.
Video звонок.
Yeah, and the second question is
А?
if you don't mind.
Это
Hey,
по группе.
can I ask anyone who's not speaking to please remain on mute? Sorry about that. You go
Yeah,
ahead.
that's okay. I have the second question is I know that you have a membership we subscribe through Seeking Alpha, but I
Yes.
know Seeking Alpha recently also bumped up their annual price. So I was wondering if there any I know their membership fee is a reasonable comparable to your service, but I was wondering if there's any way like we can only subscribe to your service but not Seeking Alpha, or is that how it works or not? Just
Well,
curious.
yeah. Well,
Nothing.
you are subscribed to just my service. It's just that Seeking Alpha is the platform that hosts
Right.
my
Okay.
service. So,
But so far that's only I have to subscribe both in order to get to your service, right?
oh, I didn't know that you had to subscribe to anything on Seeking Alpha to get to my service.
Oh, I didn't know because first of all I'm a Seeking Alpha member, so I'm the kind of like the premium basic premium member. They charge $300 or something, maybe a
Yes.
little bit more. And then I also have your service. So do I need to pay that 300 something member fee on the Seeking Alpha to get to your service, or don't?
I don't believe so. No, you don't.
Oh, okay. Maybe I got it wrong. So, okay, yeah. Thank you so much for clarifying that.
No problem. What was the stock that you mentioned just so that
Yeah,
I
just coal industry in general, like AMR. I know, some you haven't purchased that, I believe, but Manish Pabero, for example, he's a big investor on this sector. I was wondering if you have any thoughts on that particular sector
Yeah,
going forward.
I'll be
Yeah.
honest with you. I haven't invested in coal stocks in a very long time, in maybe over 10 years. But I do see potential here, just because we do require a lot of different energy sources basically, and we have a lot of energy needs. And coal seems to be a pretty decent option here. And I'm actually looking at the chart of AMR here, and it looks quite bullish to be honest with you. So I mean, first of all, we had a very nice double bottom around 100, which is super April, and then it got retested in June. Since then, the stock has been in a very nice uptrend. Right now, it's forming a very bullish cup and handle pattern, and it seems very likely that it's going to break out above $170 here very soon. And we also see I also see the 50-day moving average about to cross over the 200-day, so we're going to get a golden cross right there.
Yeah.
And
What would you be the ideal entry point? Just if I get like any pullback that you think it might be
yeah,
interesting
I mean, look,
to
the
buy some.
pullback that I'm talking about, it doesn't, again, it doesn't have to be like a market-wide pullback. I mean, it's probably going to be more like of a sector rotation type pullback. I mean, we could have some days, where the market kind of, pulls back broadly, but generally speaking, we're probably going to be seeing rotation happening, maybe out of some of the higher alpha names that are, very kind of out there valuation wise, into possibly more stable like material type stocks, like coal names could potentially be one of the sectors that we do have rotation, and oil could be another sector. So, we're not necessarily looking for like a big dip here in AMR. We could potentially see maybe a pullback to 140, 150, but that's in the scenario that the broader market corrects by 5 or 10%. If it doesn't, then it could stay within this 160 to $170 range, and then we could see a nice kind of, breakout above 170, and we could even see that move quite soon, actually. So I definitely like, AMR here. I like the setup here. I may even, maybe I'll enter a position because it seems to make sense here. Looks good. I like it.
Yeah,
Thank you.
yeah. Hi, Victor. I just want to say thanks again. Yeah, great service. Love it. Been
Thank you,
following
Terry.
the service for 4 years now. So good stuff, and long may it keep going. I
Thank
know
you.
you use options to hedge on occasions when we think that there's going to be potentially a bit of a pullback in the market. But have you considered including options in terms of the AWP or as a separate service potentially? Because there's quite a bit of interest around trading options as well as
Yeah,
as
I understand. I do incorporate some options in AWP, like, the covered calls and put options for hedges, some collar options. Now, I don't want to incorporate too many options. I don't want to, go with call options, and I don't want to go with anything that doesn't have to do with hedging. Like I don't want to go with cash secured puts. And the reason why I don't want to do it is because the all-weather portfolio is already a little bit complicated, and I understand that, all investors are different. Everyone's experience level is different, but you know, from just from like an outside perspective, the all-weather portfolio, it is already rather complicated, and I would prefer not to complicate it anymore with more options. So having said that, I could potentially include some general option ideas in, market updates or articles, and typically I do that at times. And actually, a lot of the stocks that we do go long on at some specific times. They can also, I mean, a lot of people go ahead and open, um, some leaps in those positions or, call options, things of that nature as well.
cool.
Hey,
Thanks, Victor.
yep, I
Hey,
see,
Victor.
I see Will has his hand up, so I'll go ahead and go ahead, Will.
Thank you very much. First of all, just wanted to thank you again for your service. And I think, the way you do the all-weather portfolio makes it easier for me to kind of stomach it emotionally because it's not doing wild swings. So I appreciate the all-weather aspect of it. And that leads to my question, which is, and basically, I'm following you almost exactly at this point. But if I wanted to, at certain times, be more aggressive than you, or at certain times be less aggressive, what would you recommend that I consider doing if I'm thinking in those either direction?
Yeah, so I mean, if you want to be a bit more aggressive, you can either, like, if I announce a 1 or 2% position, you could potentially go, 2, 4, 5% in a position. Likewise, you could also, maybe do like 1%. Like if I say, buy 1%, you could maybe do, buy 1% position and then also allocate some percentage to like leaps, long dated call options, or something of that nature. So I think as far as getting more aggressive, that's the way to go. And if you want to be less aggressive, I would just consider probably keeping a more significant cash position on hand, and also potentially hedging a little bit more, because I do leave a lot of positions unhedged, and also possibly implementing some, just some stop out orders just in case, something goes lower than we anticipate and we don't get that additional drawdown. So those are some steps that you can take.
Thank you. Thank you very much.
You're welcome. I see Chris has his hand up, so go ahead, Chris.
Hi, Victor. Yeah, thanks again for everything. It's been 2 years and very satisfied
Thank you.
with your service. I was wondering about the energy sector just broadly. There's a lot of different plays in it, like oil and like I guess the one that's more popular is the SMR. Personally, I'm pretty interested in natural gas, like in North America. I wonder what your thoughts are on that, and specifically like to the thing about nuclear. It seems pretty exciting, but to me it seems very unrealistic that nuclear is going to arrive anytime soon to provide any kind of meaningful power in the timelines of AI kind of data center builds, which is sort of why I'm more interested in renewables and natural gas because those are much more scalable. What do you think about that and those SMR and kind of nuclear stocks?
Yeah. So, I mean, all right, let's start with the SMRs. So the SMR nuclear stocks, I think they do have a lot of potential, but there is a great deal of risk attached to the stocks right now, especially given their enormous valuations. Now, there are also different companies. So, I mean, the three primary ones that I look at are, of course, Oklo, SMR, which is new energy, and also nano energy or whatever it is, stock symbol NNE, I believe. So, out of all these, I do believe that Oklo has the most significant potential. Okay. Now, having said that, its $20 billion valuation here doesn't really make much sense. And Goldman Sachs just actually came out with a note on this and pretty much saying exactly what I've been saying recently about it and what I'm saying now, that this valuation, it doesn't make much sense. And I saw Dan Ives upped his price target to 150 on Oklo recently, and I actually viewed that as kind of like a counter, like a counter signal that probably this stock has maybe gone too far because at 135 he's saying is putting a $150 price target on it, that gives it like a $30 billion market cap or something, and it's not even going to generate any revenues until maybe 2027, maybe 2028. Really, who knows? And they haven't demonstrated, basically anything yet. So, I mean, putting up that kind of money is ridiculous. And just in full disclosure, I am short Oklo in other accounts. And it's been a very successful short so far, and I am still short the stock. So, now as far as long-term potential, yes, of course it has it, but it would have to be at a lot lower for me to go Oklo long again. So, we can probably get a pullback to at least 100, at least 100, at least to maybe 80 to the 180 to the $100 range. And I think in a worst case scenario, if the market really gets negative on these stocks, we could get it back down, below $80. So don't think like, 110 or 100 is as low as Oklo can go. Now intermediate and long term, I think it has a lot of potential. I'm not that confident in SMR. In new scale, I'm not that confident in the company, and I'm even less confident in nano nuclear, and I'm short nano nuclear too right now, actually. Now the second part of your question was regarding oil and gas stocks, and I like those. I like that they're cheap. I like that, technology is proven. It's basically there's a lot of oil, a lot of gas, it's right there. It's easy to access. I mean, we don't need to build these enormously expensive nuclear reactors. But down the line, the thing about nuclear is that you get an enormous amount of energy from a really small, compact space, which is the future. Sorry, was there another part to your question?
No, I guess that's it. That's it. Yeah.
Okay,
Yeah.
perfect.
Thank you.
All right, so next we have Blake. Let's go to Blake.
Yeah, so thank you, Victor, for your service here. I found this very helpful. The question I have is about valuations. So valuations have been higher for some time, price to book, price to sales, PE ratios. They were somewhat high before the April correction. They're high again. I've been seeing some articles that some on Wall Street is starting to say, higher valuations are the new normal. I'm just wondering, do you think that high valuations really are a new normal, or is this something that will
Yeah.
kind of eventually correct itself?
Yeah, well, both. I mean, it is the new normal for now, but eventually it's going to correct itself. And the reason why it's the new normal is for several reasons. But the primary reason is the Fed. And the Fed is gonna we're entering a very we're probably going to be entering possibly the most accessible monetary environment in history. So that's the perfect environment for valuations to increase in. And that's the bottom line. Now, in addition to that, we're also seeing, increased efficiencies where, we have the AI element that's going to improve optimization and company efficiency, productivity, and profitability as well. So, I mean, that's another reason for higher valuations. So basically, yes, the fundamental backdrop is set up very nicely for valuations to continue expanding into 2026. There's also the inflation factor, and then and beyond. But that's not to say that we're not going to have corrections, because every bull market needs corrections. So at some points, we are going to have 5 to 10% pullbacks just to get those elevated valuations, at least a little bit in line. And then eventually there will come a time when we will have a much bigger reset, and that will probably occur when the Fed is ready to tighten again, and when the Fed begins its next tightening cycle. That's probably when, we're going to see valuations contract, in my view.
Okay, that's very helpful. Thank you.
You're welcome. Okay, next, let's see. We have Heritage Media. Heritage Media, go ahead.
Yeah, hi, Victor. Thanks for taking the call, and I appreciate your work. And
Thank
one
you
of
for
the
being
things
here.
that I wanted to ask you is, I follow your recommendations pretty religiously with respect to, how you're handling the portfolio. And there are
Good.
times when either because, I don't have enough funds to allocate, or maybe I missed a signal because I was not there a particular day. And one of my questions is, if we want to catch up, if I want to catch up to how you're allocating resources to different sectors in your portfolio, um, is it still okay to aim for, how you allocate different stocks and, look for that prices whenever it dips on a red day or something like that to catch up? Or just move on and, forget about that and just, try to focus on what's going to come next. And as a follow-up question, in the crypto sector, I'm pretty underallocated with respect to Bitcoin and Ether and stuff like that. And my question to you is, given that some of the sovereign nations and mainstream banks are thinking about bringing that as a token into their balance sheet, is it advisable to accumulate a part of the portfolio in that sector? And if so, what percent would you recommend? and going forward. Thank you. I'll listen.
Okay. So, the first part of your question is regarding the investing and then catching up. Okay, so I mean, this we can be pretty flexible with, I think. In many cases, you are gonna have some issues where maybe I'll make a buy or something, and then you're not going to see it in time. The stock may move up by 5 or 10%. So if it hasn't gone up like way too much, typically, if it's within like a 24-hour time frame or something, it's usually still probably a good time to enter that position. On the flip side of that, you can always, my timing isn't always exact. A lot of the times I'll open a position actually early in a stock. So, I mean, that could even work to your advantage. For instance, I'll buy a stock on a dip when it's 45, a day later it'll be at 44. So, probably a good time to enter that position. And then in like in a worst case scenario, if you miss the trade, then it's no big deal. You miss the trade, you move on to the next one. And, I always say that the market always has opportunities. It always gives you a lot of opportunities. It's just a question of kind of being a little bit patient and letting them come to you at times. So, yeah, that's my advice on that. And regarding crypto, I definitely think that it's wise to have some allocation to at least to Bitcoin and Ethereum, and especially Bitcoin in my view, and possibly to possibly a little bit of exposure to some altcoins, as well, but to a lesser degree. Like I have a little bit of Bitcoin Cash, I have some Litecoin, I have a little bit of Doge, just the ones that I like. So and I see some future prospects and um so yeah, I think again, your allocation size, it depends on your risk tolerance, on a lot of different factors. But if you have like, a mild to medium risk tolerance, let's say, maybe about 5% up to 10% in a, in a bullish case scenario. Now that's not to say you should go ahead and allocate 10% right now to Bitcoin. Maybe start slow. I would add on dips, preferably, you know, increase more around the low points. Like, all markets go through cycles. We're gonna have another bear market at some point in the crypto space. So maybe get your portfolio position up to that, 10 or maybe even a little bit higher mark during the low point when we experience that in the future. I don't know exactly when that will be, but for now, maybe a 3 to 5% allocation maybe okay for now.
Thank you so much.
Yep, you're welcome. So I see Peter Leon, go ahead.
Yes, nice to be in your room, and I appreciate your fantastic work. Sorry for my English; it's not the best. I'm from Denmark, so
Oh, it sounds fine. Sounds good.
yeah. But I will ask, which investment themes do you think will be the leading for the years to come, and we will be the most profitable to be in? I think certainly AI, but AI it's very broad based, but there's also other things, investment things.
Yeah. So, I mean, AI definitely, it's really broad. So, I think there are going to be, kind of continuous opportunities in AI for the next maybe decade or so. So, there are certainly opportunities on the software side. There are still opportunities on the hardware side, but there are going to be probably more opportunities on the software side going forward, as well as and services, as well as I would say on the hardware side, but not in the server space, but more in the PC space, and then basically your, you know, your gadgets, like, your smartphone, whether it's whether it's your headphones, whether it's a smartwatch, whether it's your notebook or whatever. I think that there's going to be a lot of AI opportunities in this space. And some companies that could do really well, are companies like AMD, Apple could do really well in because they've been lagging in AI a lot. So they basically have a lot of catching up to do, and they could actually do quite well, I think, in the future. But there's certainly other companies that could do very well, that that play kind of an instrumental role in improving, in enhancing the AI in the gadget market, so to say. Um, you know, as far as other sectors, we're looking at robotics as an obvious kind of next huge market, and more specifically robotics incorporated with AI, because that seems like a really interesting and logical kind of combination that will probably have an enormous market for in the next 5 to 10 years, and an obvious market leader in that is Tesla. So if you're gonna ask me why I have such a big position in Tesla, it's not because they sell the best electric vehicles. It's because they have enormous potential in cornering the FSD market, which I believe they will do, and essentially owning a huge part of the robotics AI market,
Yes.
which I believe they will dominate in.
But I hope you keep an eye on when we should buy these stocks. You follow.
Yes,
When
of course, Peter. I will do my
so
best. I will
yeah,
do my best to keep you
yeah.
guys in the loop, and if and
And
on
what
your end, if you notice any interesting stocks in this space, you let me know as well. Now, other
Yes.
sectors
Okay.
other sectors that will do really well, that I see, as potentially doing very well in the future. I like this eVTOL segment, the flying electric vehicles. It makes a lot of sense. It's pretty primitive what we have now with Joby, Archer, and the eVTOL company from Britain. Um, it's pretty primitive, their vehicles, I believe now, but these could improve drastically in the future. So that could be a big segment. Also, space, because I believe that there's going to be a lot more emphasis on space, defense-wise and exploration-wise as well. So of course, Rocket Lab is a good company. Um, Intuitive Technologies, or what's that, LUNR stock that we own. That is a very interesting company, actually. I increased it. I think it's called Intuitive Machines. One second.
Intuitive.
Yeah, yeah, yeah. So yeah, in Intuitive Machines, ticker LUNR. This is a very interesting space company that I like. It seems pretty cheap right now, but they need to execute well, so it's a little bit increased risk. Other segments, defense, future defense, a lot of drone technologies, and it's not just drone technologies. It's basically, kind of, I would almost call it like robotics technologies for defense. And again, we have Kratos, we have Red Cat, we have this. We don't own this company, but ticker AVAV is another one that I want to buy. It's another one of these really advanced drone companies that should do really well. Northrop Grumman has a very nice program. I increased that stock recently, so definitely. Actually, L3Harris is another great company. And I think Boeing could do a lot of good things in the future. So I do like defense here, and I do like a lot of these futuristic defense companies. Okay.
Thank you a lot.
Yeah, absolutely. Next, let's go to Nick. Nick Z, go ahead.
Yeah. Hi, Victor. It's Nikita here.
Hello, Nikita.
Thank you very much for your service. I have a question more of a. I've been looking at your portfolios, the AVP portfolios over the years, and I noticed that specifically in 2024, you started going more wide in your, in your companies. I mean, previously you might have had 20, maybe 25 positions in the AVP. But as of, I think, recent count, you're kind of getting closer to 50 right now. Is there like a strategic move for 2024, or can you give a little bit of a, background on this? Thank you.
Yeah. So, I mean, the all-weather portfolio, it's of course it's evolved over the years, and it used to have a lot fewer holdings. Now it has more holdings. Having said that, I have to say that I believe the optimal number of holdings may be around 30, maybe 35. So I do think that the all-weather portfolio has possibly has too many holdings, and it's not like a huge problem, but the issue with it is that it makes it a little bit more challenging to just keep an eye on everything and realize, because a big part of the strategy is also to adjust positions around crucial peaks and troughs. That's where a lot of the outperformance comes from actually. Now, some people call it timing the market. I don't like that phrase. I just like taking profits because I don't like to, lose money. And also, I like to outperform by a lot, not just like, beat the market average or beat it by a little bit. I have a goal to beat the market by a lot. Okay. And in order to achieve this goal, um, you know, we need to make adjustments around crucial peaks and troughs. Now, having too many holdings makes this task more challenging, which is why I believe the optimal number of holdings is probably around 30 to 35. And in future quarters, I will attempt to bring the portfolio back into that range. I'm also considering increasing more ETFs, introducing more ETFs into the all-weather portfolio because that gives it a nicer balance, I think. So there are going to be more changes going forward, and yeah, and the reason why we've had an increase in positions is basically because there are a lot of really interesting companies that I like to be in. But having said that, we can't own them all, so I think it's better to actually decrease some of the holdings.
Can I have a follow-up question
Yes,
on this
yes, yes.
on this
Go ahead, go
thematic?
ahead.
Um, what would be, I mean, this question has been raised many times, but maybe it will be beneficial to everybody. Now, after in this quarter, what would you be naming your core positions, like the core, 5, 8, positions of the current setup?
Yeah, so I mean, of course, Tesla is a core position, AMD, Amazon, Meta Platforms. I believe Dell can remain a core position. I actually think that Sentinel-1 is worth having as a core position just because it's in that transitional phase from where it's coming from, just being an unprofitable company to becoming increasingly more profitable. So I think that the market is mispricing it now. So I'm keeping Sentinel-1 as a core position. Outside of that, I also believe that Marvell could be a core position. Broadcom could become a core position again if once I re-enter the stock. And Google could also be a core position once I re-entered. I think that the recent run up has been too aggressive. So I kind of got out of Google for a little bit. Now outside of tech, I believe that we could potentially keep some of the nuclear stocks as core positions. For instance, Cameco, Constellation, Vistra, BWX Technologies. These are all excellent companies. These aren't like like the riskier SMR plays. These are the really well-established nuclear names. So I believe these could, some of these could remain core positions. Albemarle, I'm going to keep a core position in because, I think lithium prices are going to go much higher. And I also believe that some of the gold miners can remain as cores. For instance, Agnico Eagle Mines is, it's the best gold miner, I believe, globally. So that's going to remain a core. Newmont, it can use a major correction here, but that's also, I'm going to keep that as a core position. And I also think that Barrick mining actually can be a core as well as possibly Pan American Silver and Hecla Mining, believe it or not, could actually become a core position because this company is becoming more and more important as a strategic, U.S. Silver and gold miner. It's actually the most significant silver miner, American silver miner. So that could be a core position, and then Bitcoin can remain a core as well. Okay,
Thank you.
you're welcome. So let's go to P said. Go ahead.
Good morning, Victor. So it's actually Peter from Germany.
Hello, Peter from Germany. Sorry about that.
Thank you. Thank you very much. As you know, I've been here just for a couple of weeks so far. I'm very impressed with what you're doing. So
Thank you.
I'd like to say thank you so far and long may it continue. I actually have three questions, slightly that all not related. One is, as an investor from Germany, do you and I tend to consolidate in euros, living over here in Europe. Where do you see the dollar exchange rates going, and do you see any way of sort of mitigating any potential risks?
Yeah. So, I mean, it's at 1.17 now, I believe.
Yeah.
Something like that.
Yeah.
I actually think that this is a pretty reasonable range. I mean, all central banks are cutting rates, so I mean, it's more or less a race to the bottom, as they say. So I don't see a reason for the dollar to depreciate more versus like the euro and most other currencies. So I actually view this kind of 110, 120 as a pretty decent and stable range going forward. Um, you know, and the Fed is going to be probably cutting a lot. So I mean, in a worst case scenario, I guess, if things get really dovish in the US, we could potentially go above that 1.2 mark. But, on the other side of that, we have to consider that the US economy is probably going to be doing really well actually next year. So from a growth perspective, so that could actually cause strength, or that could offset some of the weakness. So I'm actually pretty comfortable with this range here.
Okay, thank you. No, it's sort of you read too many cataclysmic things in the press about what might happen here and there. So
Yeah, I don't. I try. I try. I try not. I try not to read that stuff.
Second one is really just on procedure and how you make decisions. I admit sometimes I have trouble deciding when to sell, and especially maybe when obviously one hopes that everything you buy will go up, but it doesn't happen 100%. How do you decide when to trim or get rid of a position that maybe isn't performing as you'd like?
Right. Good question. So, I mean, it's all company specific, of course, and situation specific. So it's challenging to give you a direct answer in that regard. However, in a lot of instances, if we're talking about, getting out of a position, if something moves up a lot, first of all, I typically have a plan. Like, around what range I will take some profits, around what range I will decrease the stock if it goes lower, or if maybe I'll just dump the stock in general. So, when something goes higher and it hits that I guess and a lot of times it has to do with technicals. So, if I own something, and even if it's something that I like a lot and I plan to hold longer term, if it gets really overbought, technically, I'm going to take some profits because I understand that the probabilities of a correction are elevated, and they're just going to increase from here if the stock continues higher. So maybe I'll take 20 to 30% profits then. If it keeps going higher, maybe I'll take that, maybe I'll bring that up to a 50% mark from the original position.
Mm.
And then if I see something as there's a higher probability that there's limited upside and more downside ahead, then maybe I'll just sell the position completely for some time. And again, it depends on the position. Like for instance, if it's Google, like Google is still a stock that I want to own. I simply sold it because it just had run up too far. It became very overbought technically, and I believe that there's going to be a pullback coming up where I'll be able to buy it cheaper. It's the same scenario with Palantir. I held it from like $6 to like 150 or something like that. And then I took profits. And of course I took profits on the way up as well. But I exited the stock at like 150 or something. So it's not that I don't like Palantir. I just don't like Palantir's valuation. I think it's an amazing company. It's going to be $1 trillion company in a few years, but I don't want to pay $180 for it now. So my plan is to repurchase some when it goes lower. But if it's a stock like Trade Desk or something, or like a Lululemon, that I recently had in the portfolio. And I just, if I view it as like a value trap, or if I view it as a stock that's losing its growth story, or it's a growth stock like in Trade Desk case where there is just too much threat, I guess, from Amazon and other competitors, um, then I'll just go ahead and just cut the stock and just kind of, just walk away from it. It's fine. I don't need to own everything.
I understand that. Thank you for that. That's great input and helps me a bit.
You're welcome.
One more question, if I may, just
Yeah,
particularly
sure.
industry specific. You've got, I noticed, of course, in the AWP, you've got gold miners, silver miners, some materials, and nuclear. Do you not consider other materials such as copper, which is a particular topic, and for me seems to be a shortage coming down the line in the next years? Is that not maybe a place to start investing at the moment for looking for returns in the next couple of years?
So, yeah, I do think I do like materials, and I do like copper. I think that the world is obviously going to need more copper, and I think there are opportunities there for sure. And one of my favorite plays in this sector would have to be Freeport McMoRan. It actually had a nice pullback recently, and I missed the exact like the perfect time to buy, but I think we can still buy it here around $37. So yeah.
Okay, so it will be considered. I find that I do have a number of them. Been quite fortunate recently with those stocks because the copper price has gone over 10,000 for the first time in a while. So anyway, thank you very much for your answers, and thank you very much for your service and what you're doing. And I'm looking forward to hanging around for quite a long time. Thank
Okay.
you.
Thank you. Okay. Let's see. Hassan, go ahead, Hassan.
Yeah, Victor, I was just a couple questions more. It's like, what sector you think like will have like high returns in like next quarter? Like, I know nobody has a crystal ball, but what's your anticipation like for next quarter? Like the silver, gold, and miners did a lot of good like in this quarter. Tech did good. What do you think will be next quarter?
Well, I think we could probably expect, just some transitory pullbacks in a lot of the names that have gotten overheated, but I still expect many of the same things that performed well, recently to continue to do well in Q4 and in 2026. So I don't see a reason why, why we couldn't continue to see tech doing well. Some pockets are a little bit frothy here, but I think we could have some pullbacks, and then tech could really have a nice finish to the year. And in addition to tech, I still like the nuclear space. I like GSMs, gold, silver miners. Those need a pullback, but after the pullback, I think we can have another strong showing later in Q4. And I think that actually you know, the oil segment, oil and gas has been kind of neglected a lot, and especially, if we get maybe more pressure on Russia and some more pressure on countries that buy oil from Russia, that could potentially cause oil prices to increase, which would be very beneficial to oil-related equities. So I definitely like the oil segment going forward. And in addition to that, I also like the idea of coal kind of continuing to do well here. So I'm going to look to maybe incorporate some of that into the all-weather portfolio. And I also like the defense space because it doesn't look like that the war in Ukraine is going to end. It doesn't look like there's going to be a peace agreement. President Trump said that he is willing to provide offensive weapons now. There was just a $90 billion arms deal done, and that could be just the tip of the iceberg. So I think a lot of money is going to start flowing not just into Ukraine, but also into NATO nations, especially the ones that are on the eastern side of Europe, the ones that are closer to Russia. So, yeah, I definitely expect a lot more defense spending. And since the US has the best defense contractors in the world, I think a lot of these companies like Northrop Grumman and General Dynamics and L3 Harris and some of these drone makers, as well as other companies, Raytheon can do really, really, really well. And another sector is actually, I believe that biotech has been kind of, hasn't done too much this year. I mean, it got hammered for a while. So I think we can look for some opportunities in biotech as well. I'm actually looking for some right now, considering some more positions in the biotech space. Okay.
Great, great. Thanks, Victor. One more question.
Да,
It's like,
слушайте, а вот здесь давайте по разделам пройдем.
Yeah, go
do
ahead.
you do you think like um we need to enter like in MU again because we sold like everything in MU or Micron?
Yeah, on a pullback, I think these can have more pullbacks. I would be a little bit patient here. Just, you don't need
Okay.
to you don't need to give it like 6 months. Just maybe give it like maybe several sessions or maybe a couple of weeks. See what happens in the next few weeks. I think we may see some more buying opportunities because again, things they don't just go straight up in a straight line. I think that some pullbacks could be in order, but we'll see.
Do you think also that Micron is more fundamentally cheaper than AMD? and it has like more potential and can be a core position as well?
No, I mean, I think that Micron is a lot different from AMD because Micron is a memory chip maker. Its business is much more let's say price sensitive. So what happens is that the market could get oversaturated with memory products. This actually happens in every cycle, just about every cycle that I've seen. So when that occurs, Micron's multiple contracts and the stock goes lower because they can't charge as much for their products. So that's my concern with Micron and there's a big difference between Micron and AMD.
I got it. Thank you.
Okay. So let's see. I remember I saw some hands up, but they're now not up anymore. Okay. Okay, Blake, go ahead.
Victor?
Yes.
Nope.
Yes, Blake. Go ahead.
Oh, okay. I was wondering, how do you set your price targets? Do you do your own analysis? Are there certain analysts that you follow?
Yeah, no, I don't follow any analysts. I do look at like consensus analyst estimates and things of that nature. I don't follow any analysts. I pay attention to, what upgrades and what downgrades um certain stocks may get, but I don't really take my cue from anyone. I just figured out myself.
Okay, thank you.
Sure.
And Victor?
Yes.
Hi, Victor. This is Ed.
Hello, Ed.
Hi. Like to just repeat what just so many other guys have said is just thank you for you know the performance of the portfolio is just really amazing, and we've all benefited a great deal from it, and very thankful for that.
Thank you.
So, just a question about where we're at, and I guess a question philosophically too, that right now we're sort of anticipating a bit of a correction. We don't really know the magnitude of it, but from the things you've said, it sounds like it's not going to be too bad. Um, However, anticipating that, I'm just wondering, like we've taken some profits, but there's still some profits on the table there, and wondering your thoughts on why we don't take more at this point. And
More profits in what?
well, I'm not in front of my computer, so I'm not looking at the portfolio at this minute. But I mean, just in general, you know, if we have a correction as far as 10%, I mean, there's a fair amount of money there, and just wondering if what your thoughts are on where you're at with profit taking at this point, and why we would stop at this level.
Okay. All right, good question. So, first of all, what I've been doing is actually, I guess we can call it proactive profit taking, which
Yep.
means that, we haven't really had like a clear breakdown in the technicals or anything like that. So what I'm doing now is I'm actually kind of monitoring the situation more from a technical standpoint now. And if more, if I start seeing um, more weakness from a technical standpoint, like for instance, some crucial support levels, being breached or even about to be breached, then I will go ahead and take more profits and probably institute more hedges and do things of that nature. So I guess to put it kind of in a different way is that for now, we've been doing a lot of proactive profit taking, and then in the next stage, I plan to do more reactive profit taking. And the reason for this is because I mean markets continue to be unpredictable, like a lot of people have mentioned, it was logical to have a correction maybe back in July, August, September. Now, we're entering October. So again, you're not going to be able to time it exactly. So it's probably not good practice to just kind of abruptly exit a lot of positions just because, you think a correction is going to occur because many times it won't occur then.
Yeah. Yeah. I can see that because back in April, you know, we experienced, quite a downturn. And well, anyway, so yeah, thank you. Thank you.
You're welcome.
Hey, Victor, I have a couple questions. First of all, thank you for, as everyone's saying. My couple questions are around AI.
Yes.
Personally, I work with a lot of executives and work with them on what they're doing with AI in their organizations, and I'm seeing there's a lot of uncertainty, but there's a lot of exuberance. There's a lot of people thinking that they are going to be able to transform their organization with AI, and it's obviously still fairly early in those stages. I was wondering what your thoughts are on the effects of profitability within organizations because of this. Do you think there is an overexuberance and the market is reflecting that in that companies are thinking they're going to be able to reduce 10% of their staff or whatever percentage it is in hopes that they're going to get higher profitability, or are they overestimating and the markets are being a little over exuberant and there could be a potential pullback because of that? Where do you feel that the markets are at compared to what you're seeing from an AI perspective?
Yeah, so I mean, I think it's again, it's more of a company specific kind of question because some companies are going to benefit a lot more than others from AI and all the AI optimizations and profitability increases. So of course, some companies will benefit greatly, and it's going to be amazing for them. However, a lot of companies probably won't benefit as much as they expect and more importantly, as much as the market expects. So, in that regard, that there are certainly, risks. So I do believe that this is an issue where the market seems to be a little bit, let's say, um, quite optimistic about, and maybe it's overly optimistic in this regard. So I am a little bit concerned how exactly, how that's going to play out down the line a little bit, and how that's going to actually filter out into earnings later. But we'll see.
Okay. All right. Thank you. The second question I had, and again, on specifically around AI, is the effects of the actual trading dynamic within the market. So there are a lot of new AI tools, AI trading tools, things like that are coming out there. Do you think that this is going to have a major effect on market psychology? And do you think it's going to, or it's something that should be considered when it comes to how we trade? Because now you're getting more retail investors that are going to be able to use these AI tools to, more advanced robo advisors, if you will.
Yeah, it's an interesting question. And, the market, it's always evolving. It's always, constantly there are innovations. So, um, exactly how much these AI tools are going to help people, I can't say for certain. I can say is that I am in no way familiar with them. So I'll be I'll be honest about that. Would I trust them? I mean, maybe to some extent. I'm not even exactly sure how they're implemented. Is it like algorithmic trading? Is it like algorithmic trading on steroids? Is it something like that? Anyways, it does add a certain layer to things for sure. And markets are complex as they are, with or they were complex enough, before AI. So, um, I'm not sure exactly how, what we can expect, but potentially some increases in volatility around certain stages. It's possible, maybe a flash crash here and there. It could happen, you know.
Okay. All right. Thanks. Yeah. I was mostly curious on the just when there's a major dynamic that changes in the market, how does it, how could it affect
Yeah, I think
trading in
I
general?
I think it's too early to kind
Yeah.
of
Okay.
to say yet, but it's definitely something to keep an eye on for sure. Interesting.
Okay. Thank you. I appreciate
Okay.
it.
So I see the PT2C has a question. Go ahead.
I do. Can you hear me okay?
Yes, I can.
Okay, two unrelated questions. So one, follow-up from Peter from Germany's question. What did you see in Alibaba that made you trim? And were you surprised at the upward trajectory afterward?
So Alibaba,
And I'm not even in the stock, but I was just curious. I just happened to notice that it took a big jump up, but then I recall you posting that you trimmed. So I was curious.
yeah, yeah, Alibaba went up a lot. So I mean, it went up. I think I got in at about maybe like 100 or something, or around, yeah, maybe like 115. I got in at a really nice price point, and then it jumped up a lot, right? So the reason I trimmed it was because basically, Chinese stocks have had this pattern of moving, jumping and then just dropping, like all the way back to where they jumped from. And this has been a pattern for a very long time, for years, basically. So I was basically just protecting some profits. I still have some Alibaba.
Yeah.
So yeah, that was basically the reason behind selling. It's not that much that I wanted to sell it. It's more of the fact that it had, jumped by so much
So it
that
wasn't some big technical indicator or something that you saw, or I guess.
well, t technically it did become overbought. So
Okay.
the the technicals also played a role, but not as big of a role as just the.
Historical pattern.
Yes, yes. And maybe it's kind of moving away from that now. So I would actually be willing to increase on a pullback here for sure, because Alibaba seems like, it's getting its act together, as well as many other Chinese companies.
Yeah, I tend to stay away from them. But second question, a few
Yes.
years ago, I had the opportunity to invest in Klarna pre-IPO, but I didn't know what I was doing. It's like to go to these VC companies and give them at least a minimum of $10,000. And I didn't do it. Now I see Klarna has IPO'd, and I don't know. Who knows what I would have made or not made. My question is, do you ever participate in any of these pre-IPO,
No,
offerings? Okay.
no, I don't. I mean, that's probably something that I should look into. I would have loved to invest in SpaceX several years ago if it was possible.
Well, that
Um,
was my question. Do you ever see part of the service expanding into something like that? You
I
know?
mean, I wouldn't rule it out. Anything is possible.
Okay, that was it. Thank you. And thanks again for your great work.
Thank you. Appreciate it. Okay, Steve.
Hi, Victor. Can you hear
Hey.
me?
Yep,
Good.
I hear you, Steve.
Hey, I appreciate the opportunity to learn and follow with you, and appreciate all your hard work. And it's been a good experience for me. I appreciate it. Thanks for that.
It's great to have
I
you here.
got in a little bit late to the meeting, so I apologize if this was brought up, but kind of in line with you mentioned, robotics and defense and eVTOL and drones all moving forward. I know that we are in lithium stocks, so those are all battery powered. As far as rare earths that go into those, do you see the rare earth market? It's gone up a lot in the last 6 months, and there's a lot of other opportunities out there like Ucore and Energy Fuel and Neocorp, and then even graphite or graphene companies. Are you looking at those? Are they too small? Like some of those are too small micro caps for you, or do you think they've run up way too much? It's just too hard to pick a winner there. And then just in parallel to that, talking about lithium, that next step is actually the battery companies themselves, such as Enovix or Microvast. Are those, you're waiting for those to play out, or are you looking at some of those opportunities? Just any feedback on rare earths and where you still see them, and then as well as the step to lithium battery stocks.
Yeah, that's an excellent question. Just so I get, just so I don't forget, what was the battery company called that you mentioned?
Well, there's
Or
Enovix and then Microvast. Those are both
what's
still
what's the
more
ticker? Do you know what the ticker is?
ENVX, and then MVST.
Yep, I will definitely look into those. And then you also mentioned the rare earth plays because we have MP materials, which is I believe the best rare earths play. I'm looking to increase that on a pullback, but I do know that there are others, and I have looked at them. Can you just tell me the tickers for those that you're looking at?
So USAR,
Uh-huh.
UU, 4 U's,
Yep,
and
I've
then
looked at that one.
UCore is UURAF.
UURAF.
And then you mentioned metallurgical coal. I know Peabody, BTU, and metallurgical coal is METC. Those I think just got some news here in the last couple of days and made a little run. Well, Peabody's up probably almost 50% in the last month and a half. But yeah,
Yeah, it's pretty amazing because I mean the last time I owned Peabody was like 15 years ago. But but yeah, look at it. It's doing great. Yep, excellent uptrend. Um the UU stock is a little bit overbought here. I would probably
yeah.
wait for a pullback here, maybe to around, 12 bucks, I think, 12 to 10 if it gets down there. That looks like a great buy. And let me just see one of these batteries, ENVX.
And my understanding is I think that defense is looking at a bunch of different options for to report back to President Trump, I think either this month or next month, as far as what are metals and different rare earths that we require for, security in the future. And then he's going to, I think, make some more plans to continue to quote unquote invest in some of these companies, I believe.
Yeah,
Uh,
so I mean, yeah, this MVST company looks very interesting, ENVX as well. Um, I certainly like this this whole segment. Now, we do have to be a little bit careful here not to get in on things when they're way too hot just
Too
because
late, right?
yeah, just because, the market looks ahead. We've had some massive run-ups here already, like it's something like UURAF. I would certainly wait for a pullback, maybe to around, if it pulls, if we get an opportunity to get this one at like $3 or lower, then I think that could make sense. Now, of course, I still have to look through these and just look at the valuations and everything like that, or how much they could be making in the future. But from a broader kind of perspective, yeah, this segment, this space, it makes a lot of sense. Things, they're probably just getting started here, and a lot of these have run up a lot. So, we don't want to get stuck with a big correction. So I think we should, the optimal strategy would probably be to look for opportunities on nice significant pullbacks in a lot of these stocks.
Thank you.
You're welcome, Steve. Okay, so we have time for a couple more questions.
If you're
Okay.
just
Yes,
the
Anton.
defense stocks, do you like the defense sector purely because of like what will happen with drones? Because it kind of seems like from the Ukraine war, I mean, all the traditional military equipment is like not as effective as people thought. And it seems like everyone's scrambling now to get like more of a autonomous type of drone type of weaponry.
Yeah.
You see them all, like, because you bought a bunch sort of broadly in the defense sector, but to me, it seems like it would probably be difficult for the traditional players to pivot to that versus like the upstarts, right? So, like, I don't know what you think about that, and maybe if even of the upstarts like KTOS and ARC, like those guys, if they get bought out potentially.
Yeah, I mean, definitely I think that there's a lot of opportunity for consolidation and for buyouts in the space. And I mean, companies like Northrop Grumman actually has a very significant drone program. So that's an established defense company that has a considerable segment. So there's a lot of growth there. And it's not all about drones. I mean, sure, drones, that's a very crucial element of future warfare, but it's not everything, of course, because again, all conflicts are different. There are many variables to consider. And I think that there's still going to be a lot of um, a lot of demand for more traditional defense, um, hardware as well.
Okay.
All right, so let's see. The PT2C has another question. Go ahead.
Um, Last week or so, I looked at Boeing at 212 and didn't enter, but you mentioned it today. So what would be a good entry price that you're thinking of?
Yeah, so I mean, I've been keeping an eye on Boeing a little bit, and I entered a position at around like 214, I think, not too long ago. So
Okay.
yeah, it it popped a little bit, then it's pulled back, so it's at about 217 now. I actually don't think that this is a bad area. I believe that 215 to 210 here is a pretty solid support zone. So, we could potentially increase or, initiate around 215 to 210. Now, if the market goes through a more considerable pullback, like a broad market pullback, we could potentially see, you know, maybe it'd go down to around 200, but I think that's in like a worst case scenario.
Okay, that's what I was
Which
waiting on, that
yeah,
195 to 200. But
yeah,
okay.
so that would be like if we do get the correction, that like, more extensive, like 5 to 10%, we'd probably get Boeing down to that 200 195 level.
And what would be the catalyst for said correction?
Um, yeah,
Crystal ball.
right. For the catalyst for the correction, I mean, it could just
It
be
could
that the market becomes technically overbought and something changes from a fundamental standpoint to worsen sentiment. Like it could be something that would, decrease the probabilities for an October rate cut. It could be something that could increase the probabilities of a recession or an AI slowdown. So, I mean, it's really challenging to say
multifactorial.
exactly, yeah, exactly what it would be, but we could definitely see something that could, you know, cause cause a pullback to accelerate from here, basically.
So
Okay,
entering a position now around the 215, you would just see it as a buying opportunity to DCA.
exactly,
Um,
yes.
okay, all right. Thank you.
You're welcome. Okay, guys, unfortunately, that's all the time that we have for today. We will, if I didn't get to your question, I'm sorry. You can ask it in group chat or direct message me at any time. It was a pleasure speaking with all of you, and we're definitely gonna do one of these group meetings very soon. Thank you, everyone. I will post this in our chat room as soon as possible. Thank you and have a wonderful day. Bye.
Thank you.
Bye.
Thanks,
Bye-bye.
Victor.
Bye-bye.
Have a great